Hey, it's Brent of the Brent and Brenda real estate team. Back today, I'm with Patrick Ritchie. We are talking about the market a little bit right now. We know it's very much a seller's market out there, and there are first-time home buyers, especially FHA financing and VA financing. Maybe they don't have a large amount of money for down payment, and maybe they actually need some help with their closing costs. And in this market, that's almost impossible to get. If you're going to ask a seller for concessions, you might as well buy a lottery ticket, because you getting the house is probably about the same results of you winning the lotto. So, but we were talking about, there are ways around that, and you can do that through your financing. So why don't you go ahead and expand on that? Welcoming in Patrick Ritchie. He is an author. The Credit Roadmap talks about how to improve your credit score. Also a local loan officer here as well too. So Patrick, first off, thanks for coming in.
Thanks for having me.
Tell us a little bit about how that a buyer can actually roll those costs into their loan.
Okay, and here's how it works. It's called premium pricing, and you might also hear it referred to as yield spread premium. Basically, whatever the rate is, it's either got a charge to get that rate, or it gives you back a premium that can be applied towards your closing costs. So let's just use an example here. Yesterday's pricing at 3.25 on an FHA loan, if you have a 680 or higher FICO score, it was paying back 2.3%. So just use some easy numbers, let's say 2%. So on a $200,000 loan amount, it's paying back $4,000. Now what can be done with that $4,000? Some lenders are going to just keep that money, and they just keep it pocketed. They never get it to the client. Now, the way we at Freedom Mortgage interpret the Dodd-Frank Act, we feel that that's part of what we're not supposed to be doing.
Right.
So what we do is we give that back to the client towards their closing costs. So that can pay their lender fees, it can pay their title fees, it can even pay, it could in some cases pay their home warranty, it can pay their home inspection if it's going to be billed at close of escrow. It can basically pay for anything. It can pay for their insurance. It can pay for their taxes. I mean, it can cover everything. Now, if they go at the higher rate, let's say they need more. I have on a refinance. I have somebody on an FHA refinance who didn't on the FHA. There's a 1.75% upfront mortgage insurance premium, and so they didn't want to pay that. So instead of going at one rate, they went with a slightly higher rate and covered that. Like if you go up to 3.99%. It's paying back. Yesterday it was paying back 5%.
Wow.
So on a $200,000 loan amount, it's paying back $10,000 towards any type of closing costs. Now, at that point, that's way more than you really need.
Exactly.
Unless you have some really exotic insurance policy, that's beyond what you really need. But at 3.25, paying back 2.3, it's talking over $4,000. That should cover closing costs, because our fees are $995. The title fees are probably going to be somewhere around $1,200, $1,500, depending on loan amount. So it really can cover everything and have money left over. So it makes sense. So make sure if you do need money for your closing costs, make sure that you're getting that back from the lender. Ask about the premium pricing. Now the thing to remember is it does vary from day to day, and every day is a little bit different. So if you are going to be relying on premium pricing to pay your closing costs, it's important when you make that offer to find out, okay, what is it today? Because if the market shifts, it's possible. Because a month ago, that 3.25 on an FHA was only paying back maybe 1.5%,
Sure.
which is still good. But you want to make sure that you know what it's paying back.
Absolutely.
Keep in mind it does change. It's a daily thing, and it can change multiple times in one day. But right now it's been pretty consistent, and it helps a lot of people.
Yeah, well, I think the whole key to this is just like anything else. It's always preparation, making sure you do your homework in advance. Kind of sit down and not only work with your realtor to find out exactly where you're looking and what's important to you, but also making sure that you have your kind of financial house in place, making sure that your credit score is in great shape, making sure that you understand what's going on, what is available if you do find a home today. How quickly can you lock in that rate and make sure that it works for your favor. So it's not the easiest thing in the world, but with a little diligent effort, and I think with communication, working with your loan officer, working with your real estate professional, very attainable in today's market. And like we talked about, I think the whole key is right now is because it is a seller's market, not much inventory out there, especially in some of those $150,000 to $200,000 price points out there, where a lot of FHA first-time home buyers are out there. Asking for seller concessions is almost a no-no right now. So, as always, I appreciate you coming in, Patrick. Fantastic. If they want to get in touch with you, how do they go about doing that?
Yeah, if you've got a mortgage question, just call me on my cell phone. That's 480-203-4641. Whether you're looking to make a purchase, looking to refinance. And if you want to just email me, my email is patrick@thecreditroadmap.com. Any mortgage questions or credit questions.
Fantastic. Well, again, thanks very much for coming in.
Thank you.
I hope you found this useful. If you do have further questions, we always invite you to visit us online at www.brentandbrenda.com or give us a call, 602-380-2049 for more information.